Hey everyone, Nick Shaheen here looking at Tesla. After the earnings, today is 4:30, last day of April, and Thursday. So they reported earnings overnight yesterday, so today it traded on the earnings. So I did a video into the earnings on Tesla, and on 427 to be exact. It got good interest. That's why I need the follow up to it, because I made some statements, and this is the follow on the earnings and the level it was at. And I have some follow up to put my feet to the fire. One of the comments, by the way, thanks for commenting, but one of the comments was just two words: so sour. That's all he said, or she. I can't remember, he or she. So sour. I rewatched the video to see. I tried to be, I expressed my personal opinion, but I said I don't judge it. And I said the trade I had suggested, which was bearish for the earnings event, was against the price itself, not the company. And I was so careful, I thought. So maybe I should have said, fuck it, and then go say, I hate the company and I hate the car, because it doesn't really matter. So anyway, oops, I guess F word here. Back to the chart. The earnings were great, especially given the circumstances. I can't believe it that Tesla is the one with the great financial strength of the U.S. automakers. That is an amazing feat. Kudos to however they did it. The stock price action, I think, helped. I think they had some convertibles, loans that went to actual position in the company. I'm not sure if that happened or that's the idea. Regardless, they have a good cash position. Kudos. They have great product, great following, etc. So fundamentally, I don't nitpick it. This is not the point of this video. The price action is almost exactly what I suggested it would be. First of all, let me go in 240, smaller time frame, and put my drawings. So in the video, I drew the upside and downside. So I said it's in a breakout. It was somewhere up here. And I said I question the resistance it's going to face once it breaks out. In fact, the resistance played a very big factor. And the price action turned out negative on the earnings, not by a lot. But if you consider that it went from plus 8% after hours to minus, I think, closed minus 2% on the day. So it's a big letdown from that perspective. It was a great report, proper response, spike, but then the price action has to come into play. I have nothing against it, but when I see a chart with this kind of pattern before the last time it was up here, it's tough for the bulls to burst through on the first attempt. I'm not saying they're never going to go through it. It's just tough to go through it on the first attempt. That's why you get these inverse head and shoulders, cup and handles. How do these develop? Like this particular one right here. They come to a neckline, they fail, and then they come back to it, and then they try to burst through it. And all they're doing here, so that makes a cup and handle or inverse head and shoulders. All they're doing is retesting the neckline from which they broke out. So I was right. I said hunch is down. So if I traded on options, I made money because it closed down, even though it went up. I don't lose money after hours on my options. But it was a binary bet, and I quote bet. I wasn't a genius about it. I said Elon himself couldn't tell you which way the company is going to go. And I said that 752 would be interim support. So what was the low? 762 or something like that. So I knew there was support. And I didn't make the number up. I just looked in previous history. And I knew that the setup was easier lower, but it was a binary bet. So I wouldn't lay big money on it because I'm not that guy. So now what? If I'm long, I'm not panicking. If I got long for whatever reason, all they did is coming back to retest the neckline from which they broke out. That's all that happened. So if you're a fan, if markets in general stabilize, then Tesla has a chance of stabilizing, and I wouldn't start shorting it based on this report. It has nothing bearish about it. So if you think you're shorting it because this sucked as far as the report, I think you're going to have a tough time. If you're shorting it for specific technical reasons, fine. That's fine too. So now the question is, can they actually stabilize? So now they have another day on Friday to try to hold this yellow line. If I extend it here, it's not a hard line in the sand. Sometimes it is, but when the VIX is up in the close to 40, you can't bank on hard lines because that's how much nervousness there is in the market, and everything overshoots one way or another. That's why people say, "Oh my gosh, record! Oh my gosh, record, a recovery," and these idiots in CNBC that just keep saying the same schmutz that keep all the retail people doing the wrong things at exactly the wrong times. Okay, so for Tesla, you're your own expert. That's exactly what I said in the other video. Do your homework, make up your thesis, take the trade, and manage the risk. What's the risk? Not how much money you're going to lose, because you know how much money you're going to lose. You already risked it when you took the trade. That's your maximum. If you bought the shares, you already risked it. Now, what are your chances of success? That's really what you should manage, because you already took the risk. And what are your chances of success? If it starts falling and now your thesis is broken, like if you bought it for whatever reason you had and that reason is gone, if you thought that they're going to have the truck and now the truck got delayed, then why are you still in the trade? If you bought it, if you shorted it because you thought that they were going to miss on earnings big time and they came in with a surprise upside, your thesis is broken. Book your loss if you have a loss, or book your profit and say thank you. So know what the reason is you took your trade and then decide what you're going to do. That's what people do that are successful at trading. I don't take a trade and just sit in it in spite. I have done it before and I still do it once in a while, but it'll be like small. It wouldn't be something like shorting Tesla, for crying out loud. So, or buying $1,000 stock almost. So, regardless of my personal feeling, I think the breakout is still valid for as long as they're above the neckline. The problem is this candle. This one was just too freaking big, too fast. It ruins everything. It ruins the natural order of things. It was like, yeah, trickle up, fade a little bit, test the floor, go back and finish the job. That's what normal breakouts look like. These bursts just ruin things sometimes. So that's my personal opinion. Now, Tesla itself, we'll see what happens tomorrow. The macro, I said, is important because if the markets are falling, Tesla's not going to rally by itself. It has done it before, but not when it had a disappointing price action over the earnings. Again, price action, not earnings. The earnings were great. I love it. I love it. The price action was very disappointing. It's a 10-point swing at least, more intraday, way more. And so you have to look at the macro, not because it affects the whole market. And the macro next week has the opportunity to be freaking scary. So we have the jobs report on Friday. We have the ADP peekaboo look at it on Wednesday. So ADP is private payroll. The jobs report, the non-farm payroll, is on Friday, which is the government version of the ADP. I usually ignore the ADP because it's never in cahoots. It's like a crapshoot. Are they in cahoots or not? Are they the same or not? It's not consistent, so I ignore it. This time I'm not going to ignore it because if it comes out with a hugely scary number that nobody thought, then the market might have a little tizzy. We may also sell ahead of that week. Like tomorrow might be tough because maybe people want to front run the scariness next week. If not, maybe by Tuesday afternoon. If not, maybe going into Thursday or Friday. The bottom line is, I don't want to be long markets on Friday morning before they open. That's my opinion. Because the jobs report, I know people expect, I think the estimate is 15% unemployment. I did the air math. I mean, it could be 28%. Simple, easy math for me. It could be completely wrong, but their numbers are wrong every week, every month. They revise like 30-40% this way or another, and then nobody looks at it. They report a number, and then the next report they say, oh, revision for last month, and it's like 40% of the whole value. It's like, what? Anybody in the private sector would be fired over a forecast like that. Would be like don't even pack your desk, get the freak out if you're a financial planning and analysis guy, which I was. So my math is, if we had unemployment claims running at 1,700 a week for umpteen weeks, and now they're 10 times more. Why isn't they are? That's the math, by the way. Why isn't, because now the continuing claims are 10 times more than what they were before COVID, before the shutdown. So why isn't the unemployment 10 times worse? So unemployment was what, 3.5, almost 4? Let's say 3. So why isn't it 30 unemployment? So it could be 15%. That'd be great. Can you imagine? I'm saying 15% unemployment. That was great. That's insane, right? But that's what the market expects. If it comes out in line with expectations, it's not a big deal. But if it comes out like 20, 22, I don't know. I don't think we're ready for that. So that affects Tesla. So again, great report on Tesla. Not so great price action. But yay me, I kind of guessed it right. But I really don't care because it wasn't anything major. And just the charts help you trade better your beloved stock. You can't trade it if you actually go in and out of Tesla without knowing stock charts. So today in the chat room, I was asked 3 or 4 times, what about Tesla now? What about Tesla now? In the morning. So somebody has said, I just bought calls. I can't remember the level they were at. And it was up here. And I thought to myself, okay, I need to get them out because of, it was bumping along the floorboard. And I said, if this board breaks, it's going to open up a trap door. And then later on in the day, it comes back, thanks for letting me know I got out of Tesla based on the chart you shared. So he made his own decision based on the line I drew. And if he didn't have the technical expertise, at least he knew to ask somebody that can draw lines on the chart. And I use crayons, and they were great. So get educated on charts, or have somebody that you can email or ping or chat with that could help you, especially when you have money on the line. I mean, this is not a cheap stock. And I think he had bought calls, not actual shares. I can't remember. But anyway, Nick signing out.